Charts like this or like this, they are complete garbage. They are useless. They are useless because they have been retrofitted in the past and they failed all the time. They failed all the time in the past, and so they had been adjusted, right? So initially we had a very positive outlook. We had a very nice regression. Then Bitcoin's price didn't do what that regression implied, so we need to have a new fitting. Then again, Bitcoin's price doesn't do what the new fitting says. We have to adjust our expectations downward one more time. So each time when we fit this logarithmic regression to the Bitcoin price, we get disappointed. We always have to change our expectations downward. The problem with this model is that it's a long-term model that doesn't take long-term factors into consideration. For example, inflation, right? Inflation is sky high, but does this model do any change in its prediction? No, it doesn't. A better way to look at Bitcoin's price, for example, is to adjust for inflation. Maybe adjust for another asset class. What about looking at Bitcoin relative to the Nasdaq or relative to the S&P 500? So look at the Bitcoin price and divide it by the points in the S&P 500. Then at least you have some kind of an adjustment. You don't just look at the US dollar value, you look at the value of relative to something else that also goes up with inflation. What I personally found works better is to simply just draw curved lines. So let's look at the following chart. This chart shows again Bitcoin, but this time we are connecting the tops and we are connecting the bottoms. These are simply just curved lines. These are not logarithmic regressions. And these points are all nicely connected with one another. So of course this could break as well, but at least it hasn't been revised several times in the past. But really, fundamentally speaking, I think it's better than, instead of looking at price targets, instead of looking at potential bottoms and tops, to actually assess the situation each time. So take indicators that show how hyped currently Bitcoin is, how much attention is currently on Bitcoin. And we can't really predict at what point in time will this attention stop, or at what point in time will it pick up again. It's the best to have a plan to how to react with those different indicators in the future. So for example, we could look at how much attention is currently on altcoins. Are altcoins outperforming Ethereum and Bitcoin? If that's the case, probably we aren't anymore in the early stages of a cycle, right? When everybody's talking about NFTs, everybody's talking about meme coins, everybody's talking about very, very risky investments, probably Bitcoin has already risen quite a bit and the upside potential isn't that high anymore, because otherwise people would just dollar cost average into Bitcoin, right? If the current potential return on Bitcoin is high enough, then people just deploy capital to Bitcoin. But once that stops, once the risk to reward doesn't look that great anymore for Bitcoin, at that point in time the money shifts, and at that point in time all the hype around meme and NFTs, etc. picks up. And usually those times also coincide with a lot of transactions. So once the network gets very clogged up, once a single Bitcoin transaction costs way more because everybody simply just wants to trade, that's very likely the time where you don't get a bargain on Bitcoin. Or in other words, it's very likely the time where you should be dollar cost averaging out. You should be dollar cost averaging out with a higher price than you were initially dollar cost averaging in, because usually the prices are at those elevated levels for a much shorter period of time. Here, look at this graph, right? The price is very, very shortly at these high prices, but it's for a very prolonged period of time at these lower prices. So you've got much more time to buy and you've got much less time to sell. So when you're selling, despite the price, of course, going a lot up, you have way less time. You have to use way larger amounts to sell. So most of the time, it's simply dollar cost averaging in for Bitcoin. Very rarely is it time to sell. And the time to sell is usually when the media attention is very high, when your random friend is suddenly asking about Bitcoin, when people that are completely unrelated to the space suddenly get interested in it. That's when you're selling. And of course the price might go up for another 2 or 3x. But if you dollar cost averaged through the bear market, you still have already quite a bit of a return. You should be okay with that. The risk versus reward at the end of a bull market isn't that great anymore. I made a separate video just on those macro indicators. The current situation of Bitcoin, what are the current macro indicators saying, and that video is over here. Looking forward to seeing that video, and thanks for watching this one. Bye bye.